I've been in this for 43 years. I've traded some 9 bulls, 9 bears. I've traded many crashes. And I've seen moves like this that all of a sudden end abruptly when it seems like there's nothing that can stop them on the upside. I believe that because of the internals that we see in the market and the low cash in the hands of fund managers and huge margins, all the things that we've talked about in the past, that the fate of this rally won't be much different. As a matter of fact, this rally, which really comes from February 2016, this leg of the bull market, which is of course some 8 years old, that's about 15 months off of that bottom. That's historic, actually. It beats a little bit the final rallies in 1962 and 1987. Both of those, of course, brought crashes of some 27 and 43% after those rallies were over. Even if the central banks or the PPT, that's the plunge protection team, or the BTFD, that's buy the freaking dip traders and investors out there, think that they can hold the market up in here and that all of this just keeps going the way it is, market cycles, they don't go away. They keep coming, and we have rallies and corrections. And like I said, I have been through a lot of them. Corrections have not been removed from the stock market as maybe the central banks would like to think, because they think they have it all under control, and that having 0% interest rates, well, that solved everything. Well, it solved nothing. All it did was create a false sense of what earnings are. As a matter of fact, if you look at 0% interest rates and what the average a corporation pays in for their borrowings, well, it's extraordinarily low now compared to what they used to pay what they had to pay to borrow money. So they've borrowed a lot of money, of course, to financially engineer the prices of their stocks, and their earnings are greatly affected by that. If they had to pay a normalized amount of interest rates for their borrowings, then earnings would be severely hit. And the markets will know that going forward as the Fed does get to some normalization. And what that means is that, well, it's an earnings bubble is what it is. If there's any bubble, it's an earnings bubble. And at some point, they figure that out, and they try to get ahead of it and sell stocks. And, maybe a week ago Wednesday, that 1.8% is just a little whiff of what downside can bring here in this market. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.